All right, guys, welcome back to our second episode of the podcast. Spit and Cobra is what my friends and I guess fellow forum members told me to call this. So I've got a special guest today, and I'll let him introduce himself.
Well, hello, gentlemen. My name is Diop, and after how great the last podcast was with Doc Holliday, I've got a lot to live up to, so I will do my very best.
Yeah, so top feedback from the last one was basically someone said that one of you has got to be a 12-year-old girl because your phone keeps going off. So Diop was kind enough to tell me to turn off my phone, and guess what? It was still on, so I just turned it off. So thanks for that. So anyway, we were going to get into some topics here, namely how to start a small business, because Diop has sort of been in the space already, and I want to know about his transition as to how he got in, and then we're going to switch over to tax law and certain things he's done with the tax rules and how he's done taxes for other people. We could also step into the broader accounting finance world and maybe some tips on how to manage your business better, whether you're a small business or large business. So we'll start there. So yeah, why don't you tell us a little bit about you, Diop? And you're pretty well known in the RVF Tax Lounge, but beyond that, just want to get to know you, and we'll go from there.
Sure. Well, as Cobra mentioned, I have my own tax preparation practice. I'm a CPA. And one of the things I really wanted to chat about today was how to start something like that, maybe the best way to go about it, because I know starting a business can be a little bit daunting. There's a lot of uncertainty, and sometimes it can feel overwhelming. But I think it's important to realize that anybody can do it. It just takes some discipline, and I'm happy to talk about some of the ways I did it, along with some tips.
Yeah, no, that sounds great. And why don't you tell us a little bit about, and this is always interesting to me, and we've talked about this in every single podcast, and I think it's always really cool to know how guys, or us as men, get into something like starting our own business. I mean, it's got to be stressful, number one. And number two, there's usually some reason we end up saying, fuck it.
Yes.
I'm going to start something new myself. And I don't want to be working for somebody, and I just want my own thing. I want to make my own decisions, and I want control over my income. I mean, people talk about control of your income, but I think one of the things, aside from the fitness is the obvious one, but having control of your own income has got to be something that's really empowering to you, right, Diop? I mean, I want you to talk a little bit about that, because you had a transition similar, because you were in, which I'm assuming is sort of a shitty situation. Now you're in, something that is your own and you can control it.
Absolutely. And you said it. I mean, one of the hardest things, which I was never able to come to terms with, was working for somebody else. And I did it early in my career. I was with the government, the tax court, the IRS, the Department of Justice Tax Division. And because I was sort of young and dumb in my 20s, I thought this was what you had to do. I didn't know that there's a different way. I went to grad school. I went ahead, got my MBA, CPA. And what happened after that was I got back into the, quote, real world. And I noticed that things are a little bit more political when you step into the real world. Absolutely. Meaning at work, things. I was still naive at that point. I thought, well, I'll just work hard and take on as much as I can and be dependable and be on time with a lot of things. And I think we all know that that's not really how it works. That's not necessarily what gets rewarded.
Absolutely. There's obviously a component of all this that's game.
Yes.
We talk about game with women, and this is the first time we're really talking about this from a career standpoint, and especially getting into, which we'll get into later, starting your own business. So what was the catalyst for you did you just one day wake up and say, fuck it, I'm going to start my own business? Or how did that sort of transpire? Or was there like a gradual progression or a pattern of events that caused you to say, all right, it's time to do something on my own?
A little bit of both, actually. So just a bit of quick background. As I mentioned, I started working in tax pretty much right out of school, out of my undergrad. And right after grad school, I wanted to enhance my credentials and all that, so I did go to an MBA program. And while I was a student in grad school, a number of my classmates, they knew about my tax background, and a bunch of them were like, hey, I don't know how to do my taxes. Can you do it for me?
Nice.
And I was like, sure.
If you pay me $500, yeah.
Yeah, I mean, that for us, it was more like, buy me a couple beers,
yeah.
and, we'll call it even back then.
Yeah, pretty cheap, yeah, absolutely.
But for some background, my father is also a certified public accountant, and he had his own tax preparation business at the time.
Gotcha.
So there was a lot I already knew about it, both from my dad and working in tax beforehand.
And that's really cool, and I'm sorry to interrupt, but
No.
I wanted to mention, this is something we always touch on, like having good guidance from a dad or a father. A lot of people that get into owning a small business don't have a father figure. I mean, they struggle so much, and they try one thing, then that doesn't work, and they sort of scrap for what they have, and finally they learn so many skills in the process that they start their own business. But you have sort of a unique background in the sense that you had very positive guidance, and that seems to have helped you down the line.
Absolutely, and for years I kind of resisted that. I'm like, well, I don't want to do what my dad does.
It's rebellious because it's accounting.
Yeah, it's accounting.
And I'm an accountant, guys. I could say this.
I was going to say, we can make fun of ourselves as much as we want.
Absolutely.
But with that, like my dad, I knew what his life was like, during busy season and all that. So that was one thing. I knew that was something that may be available down the line. But as far as how I got into it was, I noticed that my classmates who knew my background would come to me and say, "Can you prepare my taxes?" And I said, "Sure. Hey, I'll take me to dinner, buy me beer, whatever. I'm not going to take your money for this," because I wasn't very serious about it. But this kept actually growing in the 2 years I was in grad school. So eventually I graduate and I get back into the real world, and I have this little side business, one that I didn't even mean to get.
Mm-hmm.
I just noticed, people were coming to me more and more. They would tell our other classmates, they would tell their mothers, they would tell their cousins, things like that. So once I'm back working for a corporation, simultaneously I have this little side business that's getting bigger, and this is where I started to come into the area where things aren't always what they seem, and I'm not really sure what to call our community, whatnot, but I guess you could say, you want to say red pill or whatever you want to call it.
Sure.
So this is where I discovered it was actually working. It wasn't via dating, it wasn't through family matters, it was just...
It wasn't through a search for Polish sluts.
Right, I wasn't looking for a pussy paradise. I didn't even know it existed.
That's an often used term out there, yeah.
Yeah,
Yeah.
But ultimately, things were a lot different, leaving working for the government and then getting into the private sector. And as I was alluding to earlier, I came to understand that it didn't really matter what my credentials were or how hard I was working. There were always going to be factors which were going to hold me back, outside of my control. So I was becoming more and more disillusioned, and I was job hopping a little bit. But as I was doing that, my side business, which I didn't even care that much about at the time, was just getting bigger and bigger and bigger.
Wow.
During tax season.
That's pretty interesting, huh?
Yeah, it was almost by accident. That they were telling everybody about it. And what really happened was, and this is kind of the meat of what I was going to tell you, I kept having bad boss after bad boss.
And you said you had about 4, right?
4 in a row.
Oh my God, and they were all?
They were all women.
Yep, there we go.
All women. So this is where, for this time, I guess you could say you're blue pill or whatever the term is. I didn't know that.
Yeah, in some sense, everyone's blue pill until I finally realize, oh shit, what did I get myself into?
Yeah.
Yeah.
Like
and Roosh did that too, as a matter of fact. I mean, I don't know who he's working, but he was working for a corporation, and that's kind of how he sort of started this discovery of the red pill. And
absolutely,
here we all are, right? So
right. I mean, it just kept getting worse and worse. No matter how hard I tried to change my situation, I kept getting these bad female bosses. And I am going to emphasize that they were females. So I noticed this kept happening, and I noticed that, I was disliked because I was a male, and people...
And these were predominantly women, you said, that were your peers, right?
Absolutely. And, this was in the accounting departments of everywhere I'm working. Right. So I don't know.
It's
Cobra,
fairly common too. The graduation rate, I realized in accounting, in a good accounting program, it's over 50% female.
Is it that way
is,
now?
it is,
Wow.
Yeah. It's actually quite a bit.
At the time, I didn't know that, so I kept feeling like I was having more and more bad luck with this. And the next thing you knew, I'm doing searches on the internet about this. I'm like, I hate my female bosses. I even typed that into Google one time, and from
and there's
there,
probably a thread on it.
oh, absolutely. That's just so funny about this, because I did it as a joke. Like, I had such a terrible day at work one time, and I went home, had a couple of drinks, and I'm like, I'm at wit's end here. I got to figure out what's going on. Is it me? Is it the environment? Why is it like this everywhere I go? And sure enough, I discover a prominent YouTube personality who I won't mention who it was, but he had a ton of videos about this.
That's awesome.
And so when I started following him, I find this guy named Roosh V. And I didn't know who that was. What I read, it was like, is it a pickup artist? Whatever.
Yeah.
And then I find the forum, and I find so many threads about
there's
exactly
so many different types of people too, and
So that was such an eye-opener for me, and I just I went crazy as far as absorbing as much knowledge as I can.
That's crazy. And what are some of the characteristics that you noted of these female bosses that were sort of a pattern across the four that you worked for? I mean, I'm sure it was several years. So what did you see as consistent patterns that maybe you could tell everybody else to avoid them if you see them, I guess?
Absolutely. And I'll bet most people know, but I will absolutely tell you what my observations were. They were bitter in some way towards men. I don't really know why, but they just had this constant chip on their shoulder. None of them were married.
Something to men,
Right, exactly. And I absolutely believe that this goes hand in hand. None of them were married. None of them seemed to have happy relationships.
Wow, that's interesting.
They absolutely.
Yeah. So that was a true pattern. None of them were
absolutely
married. That is nuts. Wow.
So the ones that were above me, they must have been career oriented. They were certainly they were not attractive in any meaningful way, and that's important. I think.
Right. And I think that that's typically where you see career-oriented women.
Yes.
This pattern, I mean,
absolutely,
is they're not married because they want to sort of control their own lives. They don't want anybody else to have that control or give that control up. And the moment a masculine man comes around, now you got to give up control, and they don't want that.
Oh,
They'd
absolutely.
rather do that. I mean, really, you become a pseudo-husband to them that they can sort of beat up at work.
Oh.
I mean, they don't have a husband at home to do that to.
And
they don't have any leadership at home, so they just get to do whatever they want. It's crappy.
You're absolutely right. And, I don't know if this next part is necessarily true, but I got the impression that they didn't even really have any friends. I mean...
Yeah. And I've heard that, too, from others, or, I've read that on certain threads, that they generally don't keep healthy friendships. Even if they have friends, it's not very healthy. It's just drama and all that stuff.
Yeah.
So,
and
that's interesting. That's interesting.
Have you ever heard the expression, I don't know if it's an expression, but people who have ugly attitudes or personalities inside, you can really tell on the outside.
Oh, absolutely. Resting bitch face.
Yes.
Actually, some hot girls have it too, but usually you can break those down. But the people that are truly dark on the inside, I mean, you could tell.
Yes.
Because they also look unattractive.
Yes.
As well on the outside. I mean, I could take a resting bitch face on a hot girl, but you take that on an ugly girl, oh my God. Especially in the corporate world. Geez.
Oh yeah.
I mean, at least, some places you have somebody pleasant to look at, but geez, the corporate world is turning more and more ugly from the female side, I think.
Absolutely.
Unfortunately. But yeah, so that, kind of brings us to the following, topic is, how did you get started now that you've sort of left all these toxic relationships behind? How did you, because it's hard, right? Because now you're like, man, now you're not in the corporate world anymore.
Right.
It's very risky to start something new. I know you had a client base and everything, but to incorporate that into a business, which now we're getting into the part that's actually business, that applies to many other people. How did you go about incorporating that business? I know every jurisdiction has its own laws in the U.S. But
sure.
How did you go about doing that and setting it up legally?
Sure.
So you can now go out and get clients under your new business name.
Absolutely. So I was doing it as I mentioned, I was doing it on the side. Even though I was doing these full-time jobs, not enjoying them, I was continuing to do it on the side.
Sure.
And I reached a point where, after so much frustration, I thought to myself, I need to go full-time with this. I cannot be in this situation anymore.
Mm-hmm.
So just to get legal about it and talk about some of the procedural elements,
Mm-hmm.
it's not as complicated as a lot of people think it is.
Mm-hmm.
Because just because you're starting up a business, and I had a side business, you don't have to immediately jump into incorporating it or
Gotcha.
creating all these legal layers.
Mm-hmm.
You just have to decide that you want to have a business.
Right.
And with that comes just keep records of your income and expenses. Now I'll talk about later, what happens when you expand, your business gets bigger.
Sure.
But I think what trips a lot of people up is they're too intimidated sometimes about how to do it.
And I think the reason I wanted to touch on this is because people are intimidated about the paperwork and the legalities alone.
Yeah.
And I'm glad you said that. Like, it's not that complicated to actually start a business, guys. So yeah, please continue. I mean, that's a good point.
No, you're absolutely right. Like, it can be overwhelming, but the truth is, all you have to do to start a business is just have the desire to make money and get clients, and you need to be able to keep records of it. Now, there's obviously other elements. You want to get your name out there. You want to do marketing.
Yeah, you got to do marketing. You have to seek out clients. Obviously, do taxes, which we'll talk about later.
Absolutely.
But aside from that, like you said, you can literally, just to make it simple, you could write on a piece of paper the money that's coming in and going out. Obviously, there's software, but as long as you're doing that and keeping records, and that's for your own benefit.
Yes.
Because otherwise, you're not going to know how much money you made and how much you're spending in order to make money. Because what if you have a loss?
Exactly.
You never know what profit you made. So for that whole reason alone, you should be doing that.
Absolutely.
But yeah, that's a really good point. So yeah, please continue. As far as, and I wanted to talk about the legalities. So what types of challenges did you run into? Obviously, the legal part and incorporating wasn't one of them, but what types of other challenges did you run into that were something that you really had to bite your teeth into in order to get past it?
So you have to, or at least for me, I understood that I am no longer going to be getting a paycheck, no matter what.
Job security.
Yeah. And that's where people get so intimidated. And
I think that's why people don't start a
Right.
business generally. Yeah.
Right. So for me personally, I was a little bit worried about that, but what gave me somewhat of the courage to do it, amongst other things, was that the year I decided to go all in, I managed to pay off all of my student loan debt from grad school. So that was one
that's
thing.
Awesome.
Yeah, it was one thing. I was like,
how long did it take you, by the way?
It took me, 5 years to get all that out.
Oh man, that's crazy.
Yeah, it was tough. It was tough.
That's still not bad though. 5 years is not horrible. Here.
Not terrible, but as accountants, we know we're a little bit more. We keep track of our money a lot.
Absolutely, yeah. No, that's a tough one. Okay.
So there was that, and truth be told, Cobra, I was so upset about having just terrible boss after terrible boss. I just didn't even give a shit after a while.
Yeah.
I was like, I don't.
So you didn't have a fear of failure because it's already been so bad. Like,
yes.
How much worse can it get?
Yes.
It doesn't go down from zero, I guess.
Yes,
Right?
I was just at the point where I was like, life is so terrible right now.
Mm-hmm.
I swear I won't do this for another day.
That's crazy.
And this was right around the time I was discovering the forum and the guys in the community.
Yeah, and when you discover the forum, a lot of guys actually discover it during that time. Many times it's female trouble.
Yeah.
But this was also female trouble, which is kind of strange.
No, absolutely.
Isn't that funny?
Yeah.
But, yeah, then they discover it and they realize that, holy shit, there's so much positivity on the forum. And you sort of gather from that positivity. And, some of that is sort of, in a void right now because of whatever's going on. We talked about this enough on the last podcast, but, it's important that we have a community like this.
Yes.
Like, otherwise I wouldn't have met you, you wouldn't have met me. We certainly wouldn't have known Doc Holliday.
Right.
And by the way, guys, Diop does Doc Holliday's taxes. So this is all connected. There's like a web of, whatever it is that we have going on here. But
we have a great community here in our little
area.
In
the Chicago. I would call it the Chicago tribe.
Yeah.
And we've had quite a few people on the previous iteration of the podcast too. But yeah, and getting into that further, you described some of the challenges, but what were some of the feelings that you had and things that made you feel great like initially, that gave you a high from all of this?
Basically, anytime I got a new client, and even though it was a bit of a drip, it was, one by one, word of mouth. I hadn't even tried, doing any marketing or anything like that. But what really kept making me feel like I could do this, in addition to getting to know members of the forum, just reading that other people have done this before.
Right.
It was just the belief that I've got it set up where no matter what happens, I feel like I'm going to be able to find people to add to my client base.
That's awesome.
So it was like a snowball, more and more things would happen, and I'd be like, I think I really have something here.
That's awesome, man.
Yeah.
Hey guys, we just took a small break to get Daisy Cutter Pale Ale. I guess it's an IPA.
Delicious.
Yeah. We're sitting again in the same building that we did the podcast in last time. I guess this is sort of the spot we're going to use. But they've got good beer too, so that's always nice. So yeah, we were talking about small businesses, but what we wanted to get into, especially Diop's perspective on what he's seen with guys that want to start their own businesses. We hear so much on the forum or various forums or even just the space in our community in general. Hey, I want to start a location-independent business because I want to bang a bunch of chicks.
Yeah.
And it is probably a little harder than it looks.
Yes.
But why don't you talk about what kind of questions you've had from guys that want to not only start a business, but what are the challenges for location-independent type of businesses? Because the rules are still the same. You still have to file your taxes if your business is based in the U.S. and you're generating money in the U.S.
Yes.
So, yeah, please.
So a lot of people, I don't just do tax preparation, I do tax planning and consultations for people that are looking to start their own business because they were either in a situation like mine where they've had enough, or they just they have an idea and they want to run with it. And I'd say the challenges I see most of all, like, people don't seem to have a plan. They're flying off the seat of their pants. They're like, I'm going to sell this and it's going to be great. And but really, you have to really think it through. Mm-hmm. And I don't just mean from a legal standpoint, like structuring entities, bookkeeping.
Yeah, because that part, like you said, is pretty easy.
Yeah,
I think
absolutely.
people get stuck on that, and it's great that we talked about.
Yeah.
Just cut that out of your head,
Yeah, people get intimidated by it, but I mean, it's not that bad. There's other factors to consider, though.
Sure.
And location independence is something I hear a lot, as you can imagine, because it's the gold standard for what people seem to want to do.
As men, we all want to be somewhere in Eastern Europe or somewhere, banging a lot of hot women and sitting on our laptop and running our business. I mean, wouldn't that be awesome?
Wouldn't it be amazing, huh?
Right.
It's not necessarily my job to tell people, how I think they should do it, from getting clients and, things like that. The one thing people aren't aware of is that the United States is one of only a couple of other countries where no matter where you are in the world, no matter what you're earning, if you are a U.S. citizen, you have to report your income to the United States. So, if you have a location-independent business in Poland or Ukraine, you still have to file a U.S. tax return if you're an American citizen.
Absolutely.
Every year.
And it has to be filed by a certain time in a U.S. time zone.
Exactly.
I think it's probably Pacific time is the deadline, but yeah.
You actually, if you're a foreign resident, you actually have until June 15th to get that filing in. They do give you an extra 60 days.
But, do they? That's nice.
Yeah, it is nice.
Oh, that's nice of the IRS.
Yeah, it's like,
right.
we'll give you a little extra time before we take everything you have.
Right.
So the challenges I have with this, or that I see, is that, no matter how much I try to remind people of this, I tell them that this is so important, people just don't remember. And so they don't do this. And it can cause some real problems. Because if the IRS, if you're getting any type of form that indicates you've made money, so for instance, if you're an author selling books, you're registered with Amazon or whatever, Amazon is going to issue a form, usually a 1099, to the Internal Revenue Service.
Right.
So
they can match that.
Yeah. So just because you're living in Eastern Europe, you don't. They're going to know that you're supposed to file a return.
Yeah, and a lot of times, the point is this stuff is automatic. There doesn't even have to be a guy looking at anything. I mean, this is all automated,
computer generated.
And all they do is match up any gaps between what Amazon reported and between what you reported. And if there's a difference, of course, they're going to come after you.
Exactly.
Yeah.
It's all computerized, and it may not happen immediately. It may take a couple months,
Mhm.
but you will get a letter. And guess what? Even if you don't get the letter, they're going to proceed with trying to come after you for what they feel you
Right.
should have reported.
Yeah, I think they send you a few letters, and then
Oh,
after
yeah.
that, they're basically just going to send. It's a collection notice of some sort.
But and even better, the state we live in, like the IRS doesn't do this, but the state we live in, they move straight to referring you to collection agencies.
Oh, unbelievable! Yeah.
Yes.
Not surprising. Illinois would do that.
Because we're so broke here, you know?
Yeah. Oh my God, that is so funny. One of the things that people don't realize, as they're starting these location independent businesses is, how do you manage aside from the tax and the legal aspects, what else do they come to you for as far as managing their business? Is there anything else, or do they
Yes.
ask you advice on stuff that's beyond that?
Absolutely.
And sometimes I'm sure you're able to answer it, and sometimes it's like you have to figure it out on your own, right?
So I'll tell you the questions I do get and what we talk about, and then some of the questions I don't get, but they really need to know about.
Gotcha.
And the main questions I get are, how should I structure myself? Should I be a limited liability company?
Got it.
Should I be something totally different from myself? How should I do it? And what I tell them is, okay, are you just in the opening stages of this business? Whether you're going abroad or not, you're just starting this business.
Mm-hmm.
And if the answer is yes, I'll then say, have you had any success? Tell me about what you've sold so far. Tell me about your income.
Sure.
If they haven't had any income at all, or they're still looking for clients, they're just really on the ground floor,
Mm-hmm.
I say, just don't start an entity, don't become an LLC. We need to determine if this is going to succeed first. I don't want to create paperwork and a paper trail to your business unless we know you're moving full throttle with this.
Gotcha.
So the ones that have kind of established themselves and were reasonably comfortable that they're going to be able to continue this business,
Got it.
that's when we start some kind of corporation for them to separate their business assets from their personal assets.
Sure.
Yeah.
And for those listening, Diop can probably explain this better than I can, but generally you're separating your liabilities in
Yes.
case the government comes after you.
Yes.
If you start a separate entity, they can take away whatever that entity owns, whether it's
Yes.
buildings, laptops, whatever, but they can't come after you. But if you're sole proprietorship, essentially you are the business. You are not a corporation, not
Right.
a separate entity. You are your own entity. And they will come after your assets, meaning any personal cash that you have, it's liable to be taken. So, yeah.
Absolutely correct. And it's a bit of a double-edged sword because you don't want to start an LLC if this is just a little side hobby with losses, because then you're giving the IRS like a blueprint to your entire situation.
Yeah,
'Cause
basically, yeah.
Yeah.
Uh-huh.
So we try to figure that out, when they're on the ground floor, if they're starting.
Mm-hmm.
And just to get back to your location independence, so to speak, a number of other issues come about if somebody wants to try living abroad yet earning money, either abroad or via U.S. U.S. customers that they don't have to
Sure.
see. And that's where it can get pretty complicated.
Got it.
Because, like we said, the IRS can tax you on your entire worldwide income, no matter where you earn it.
Interesting. As long as you're a U.S. citizen.
As long as you're a U.S. citizen, yeah.
Interesting.
So, I think we had a question. Do you want me to delve into the question that we had about
we can
this?
delve
or-
into the question. And Diop was kind enough to have actually these printed. And I was going to pull it up on my phone and fiddle with putting in like 8,000 passwords, but he's got in front of him. So, yeah, go ahead. I think Dr. Howard, is it?
Dr. Howard was the one.
Shout out to Dr. Howard. We know you're also, one of us, so I know we're not going to bullshit you from this answer, Dr. Howard. So
He'll call us out, I'm sure, if
exactly.
we drop something. So if I recall, Dr. Howard was kind of asking about the requirements to report your financial accounts that are abroad, or income that you're earning abroad, and it's a very good question.
That's right, yeah.
So about 5-6 years ago, the IRS somehow discovered that, hey, people were storing their income in foreign banks to avoid taxes. Now, who would have thought that would ever happen?
Yeah,
No.
right. Yeah.
So somehow
They just got wise to it. It's one of those things that,
Took them until 2013, but they finally figured it out.
Gosh, yeah.
I believe Dr. Howard, he just wanted to know what some of the requirements were and what some of the terrible penalties were for not meeting these requirements.
Right. Mm-hmm.
So I really could go on for, a half hour about this, but I'm not. I'm just going to talk about some of the basics.
Sure.
And the main thing about this is that the IRS set up requirements.
Mm-hmm.
One of these requirements is a special form, Form 8938, that you can file with your tax return. You're doing a return. And then the other one is called FBAR, which is totally separate from your tax return.
And that's the new one, right?
That is definitely more new than the 8938.
Part of the recent regulation that they put out.
Yeah, absolutely right.
Got it. Okay.
And the sucky thing about the latter one, the FBAR one, is that the bar is significantly lowered for that one as far as when you're required to report as opposed to the first one. So
Gotcha.
And I'll just quickly go over that.
Sure.
I don't want people to
absolutely. No, I think it's a good idea for people to know this because
yes.
I think it's something that they might run into later and then figure out, oh shit, I got to report this and file these separate forms.
And there are a couple of people on our forum who I've had to talk through this because they're abroad and they didn't know.
Yeah, that's why it's such a good question. And Dr. Howard probably knew this.
Yes.
And that's why he probably put it out there.
Very good question.
Uh-huh.
So in the past, that Form 8938, most people didn't have to file it because, to read what I have on my paper here, your total foreign assets had to be 75,000 or higher at any point in the year if you're single, and then 150,000 or higher if you're married.
Gotcha.
And then
that's assets.
Yeah, assets, and that's for citizens living in the U.S.
Mm-hmm.
Living outside the U.S., this one is what I see a lot more.
Mm-hmm.
You only have to file this if you had more than 300,000 in foreign assets during the year, or 600,000 if you're married.
Gotcha.
Most people are not going to meet that. Some people are, but most. But they got all clever and decided to...
and these are the old rules.
Yeah, these are
we
kind of
just
the old
talked
rules.
about.
Yeah.
Okay, got it.
So it was never a big concern. People could skirt this.
Yeah, most people are not going to hit that threshold, especially even not the folks that, are on the forum with when they mention location-independent businesses. Yeah, they're not... some of these, the cost of living is low, and I can imagine they're not hitting that threshold. Right?
Exactly. And it was very few clients I would see the old rules for when I was, getting started with this.
Gotcha.
So about 2014, this is what they decided to do. Now listen to this. You are required to file the FinCEN Form 114. This is one you cannot file with your tax return. You have to file it online.
Mm-hmm.
If the aggregate value of your financial accounts exceeds $10,000 at any time during the calendar year.
You gotta be kidding
I am
me.
not kidding.
Holy shit.
All these people that live abroad.
That is a really low threshold.
It's terrible, isn't it?
Right. How do people know that they have to file this form? Unless they're being advised.
What's supposed to happen? That's a really good question because if they're not paying close attention to this stuff, how are they?
Right. I didn't know this. I could have just started a location-independent business.
Right.
Selling daisy cutters, and all of a sudden I would have just been like, oh shit! Find out later that. I missed filing a form or be imposed a penalty. So
I do have a couple of clients, not necessarily in our circle, just kind of outside of it, that this became a problem because they didn't know. And this was done on purpose because they want everybody stashing any kind of assets outside of U.S. banks to report it.
Mm-hmm.
It did cause a lot of problems because people didn't know about it. It made people nervous. They didn't know when it was due. They didn't know how to prepare it, And if you are a location-independent individual, 99 times out of 100, you are going to have to file this thing.
99 times out of 100?
Yes.
That is freaking crazy.
Because most people have $10,000 or more in a foreign bank account.
Of course.
This is at any point in a year.
So the IRS is just trying to aggregate the
Yes.
smaller amounts to make sure they understand how much money is being stashed overseas.
They're tired of... they were tired of people, stashing their money in like a Cayman Islands account or Swiss banks and things like that.
Yeah, obviously connected to the larger economy just to make sure that, investments come back into the U.S., I guess. That's interesting. Wow.
And just real quick, the way they enforce this, I'm not quite sure how they can get compliance, the foreign banks are required to report to the IRS when they have American citizens with these amounts in their accounts, which I'm still trying to figure out how.
Yeah, why would a foreign bank even do that?
Yeah.
They're not bound by local laws.
They're not.
So, I guess if you don't file one, what's to happen if, why would the IRS even come after you, right? I would think, this is me using logic, but then again,
it's the IRS. They don't use a lot of logic.
Yeah, exactly. And I'm sure, you want to, I always think that with spy agencies and stuff like that, they have some kind of collaboration, but, it's hard for me to believe that people share financial information across countries. And it's really hard for me to believe that countries do that. And that's a good point that you made, yeah.
When this came out 5 years ago, I was thinking the exact same thing. I was like, oh, this will never work. They're not going to get those foreign institutions to actually report any American citizen. But apparently they've been doing it, whether you're in Switzerland, anywhere in Europe, Asia. They are reporting this. I don't know how and why, but it is happening.
Gotcha.
Yeah. And I want to just mention one other thing real quick, because I think Dr. Howard was asking, what are the penalties for people who fail to do this?
If it is enforced, and if you do get caught, I guess, that's sort of,
So I'm not going to mention the old rule, that 8938, because
it doesn't even really apply.
It doesn't really apply.
Yeah.
But these penalties for the new rule, I'm just gonna read it real quick because it's confusing. Civil monetary penalties are adjusted annually for inflation. For civil penalty assessment prior to August 1st, 2016, if non-willful, up to $10,000 in penalties. If willful, up to the greater of $100,000 or 50% of account balances, and criminal penalties also apply. Wow. Disgusting, isn't it, how they can do this?
Horrible.
It's awful.
Yeah.
Awful.
Gosh. What does that even mean at the end? They're just...
It means that if the IRS is... If you're sitting on a beach in Portugal and you're having the time of your life and you forget to report this and the forein bank...
Running game and doing a few approaches.
Yeah, you're living that pussy paradise, trademark. And this can wreck your life. And I haven't had any clients where they've really had any trouble with this, but I've known about people who really got in trouble for this because they didn't know.
Wow.
Yeah, they weren't trying to be devious or secret. They just had no idea they were supposed to do this.
That's ridiculous.
Yeah.
Yeah, so and just to summarize, it seems like the old rules, you had to file it once a year, but now you have to file it any time your bank account hits 10,000.
It is once a year. So if your bank account, say you hit 10,000 at any time during 2019.
Gotcha.
Doesn't matter if you had only 1,000 at the end of the year. If your bank account had at one point $10,001 during 2019,
say it's today.
Today,
all of a sudden you have to file this form,
and the IRS will know because the banks are telling them that you had that amount. And the part I kind of hate the most is that this is separate from filing your tax return. So most people think that they just have to file their tax return and include that old form, that 8938.
Yeah, I've rarely heard, and you know that I'm not a tax practitioner.
Right.
But at the same time, I do know that most forms are filed at the end of the year. Or when you're filing taxes.
Your taxes,
Yeah. But there's rarely forms that you file during
separately.
The year. Yeah.
And this
happens to be one of them.
This is what I hate the most about it, is that it's separate from your tax returns, so they're making it literally harder for you to meet these goals because they're trying to get you.
Right.
And that's really frustrating for me.
This is pretty blatant.
Yeah.
And with those penalties too. Wow, that's ridiculous.
It's awful.
That's crazy. We probably beat that one to death, but that's a really important one. That's a really important one. I think Dr. Howard came back, and one of the things I was sort of concerned about, there weren't a lot of questions, and Dr. Howard had mentioned it's sort of the wrong season. Right now, people are not really thinking about their taxes.
It's slow,
anything like that. As far as what I wanted to get into was, people think there's certain deadlines like April 15th, and then for foreigners, you mentioned it's 2 months later.
June 15th,
And I think corporations can take an extension,
which
puts them out to, they'll generally corporations, especially large ones, take an extension.
Yes.
But the reason I say this is these are deadlines, but you don't want to be the type of person that says, oh shit, it's January now, I gotta file my taxes.
Yeah.
That's where the aspect of tax planning and strategy comes in.
Yes.
And if you could talk a little bit about that. I know you mentioned it earlier, so it was in
Yeah.
my head to talk about later.
Sure.
Because that can avoid, if you're tax planning properly, you can avoid a lot of heartache and stress at the end of the year. Because I'm assuming there's still quite a few people out there, including your clients, that are like, oh shit, I gotta file my taxes.
Oh, yeah.
But then there are people that ask you for tax planning advice. So how is that? Just explain how that's different and what the benefits are of planning properly.
Absolutely. So planning is really important, as you can imagine, because whether people are starting their own business or they have a current business that could frankly be structured better, it's important to really go over things to make sure they can minimize their tax obligations.
Mm-hmm.
And what I see most of the time during this time of the year, because like you said, we're a little bit slow right now.
Right.
And what I see a lot of is people who, whether they just have a sole proprietorship or where they've had an LLC and they've had it for a while, a lot of times people need to be taxing their businesses as a different entity to minimize their obligations, because there's so many different ways to do that.
Mm-hmm.
And that's why planning is so important, because there's people that before they came to me, they've been doing it themselves for years
Mm-hmm.
and just claiming that they're sole proprietors and they're making, very high amounts of money.
Uh-huh.
And if we'd been able to do some planning, I could have saved them thousands of dollars.
Wow.
Thousands, yeah.
Gotcha. Yeah, because what's happening is they're not really looking at what's going in and out throughout the year, which could, if they monitor that properly,
Yeah.
they could sort of do a quarterly,
Absolutely.
sort of obligation check, and then that would reduce any risk that you have. And what ends up probably happening is either they spend too much money, or they don't plan properly, or pay in time or whatever.
Right.
Is what I'm guessing. I mean, I'm saying this from what I know.
No,
is
you're
not
right.
much.
You're right, because people don't know that they need to make quarterly tax payments throughout the year.
Right.
They don't know that their records are insufficient, and there's a lot of other business expenses that they can take, but they didn't know about it because they never came to somebody like me who can
Right.
talk them through it.
Uh-huh.
And the biggest one is that they're just not structured properly, so they're stuck paying self-employment taxes when there's so many different ways around that.
Oh my God.
Yeah.
That's pretty interesting. I didn't know that.
Yeah.
Wow. And one of the things that you mentioned, you just touched on, is not knowing what to be able to deduct. And as a business, I mean, there's so many things you can deduct.
Oh yeah.
I mean, there's a lot of times people use their own personal cars. I mean, this is like probably a very basic example. But if you're using it for your business, there's certain pieces of that are deductible. If you're using your home as a business, I mean, this is all basic stuff.
Yeah.
But I think people miss out on a lot of deductions. Maybe you can tell us a little bit about a few deductions you've seen that people weren't taking. I think one of them you already mentioned.
Yeah.
But are there any other ones that people miss that?
There are several, and one of the biggest I see. So there's some kind of myth that if you take a home office deduction, it's going to result in you being an audit target. That is just 100% myth. Like
Wow.
it's accepted now that if you have a home office, you're going to write some of that off.
Gotcha.
So people
That's
miss
not
that.
even close to the component that the IRS uses to gauge who to audit, right? I mean, I don't think so.
Oh, it's not.
Yeah.
Like, if you'd like, I can tell you how they do try to decide
Yeah, no,
who they want to audit.
I think that's a great one to let people know. How does the IRS decide to audit you? I'm sure a lot of people are concerned about that at some point.
I get that question all the time.
Yeah.
The first thing that everybody needs to know. Now, I'm not saying go out there and be reckless cowboys, but
yeah.
the
We got
IRS.
a lot of reckless cowboys out there.
We got a bunch, even in our circle.
Not in
we
the
have
tax
a few.
base? Oh,
Yeah.
Okay, in the tax base too.
In the
All
tax base,
Yeah.
yeah. I won't go into details about it, but
No, that's fine.
people are always paranoid about being audited, and what people don't know is that the IRS is so understaffed right now.
Mhm.
Like, they have just been cut to the bone for years.
Interesting. Okay.
So they're understaffed. And I've got people that are making, way less than 6 figures in income. They're like, I'm going to get audited.
Uh-huh.
if you make less than six figures, and I'm talking about adjusted gross income,
Sure.
the odds of you getting audited are less than 1%.
Mm-hmm.
Now, if you're making between 100,000 and let's say 250,000, that goes up to 2%.
And you're talking about single people, right? Because
Single,
that number doubles if you're married. Yeah.
Single or married, you know, because the IRS only cares about getting your money.
Right.
So.
Yeah, and if they're, it's just all ROI, right? I mean, why would they spend that much time on a $80K person?
No,
when,
it's not worth it.
You know, all they need to do is target everyone over $200,000 or $300,000
exactly.
in income. I mean, why wouldn't they do that? You know, yeah.
Do you remember, I think this was last November, do you remember they had this thing called the thought audit where people were thinking that they're going to report Instagram models or whatever?
Oh, yeah,
do you remember that?
I remember that. That was a whole thread on that.
Right, and I just had to I had to laugh because, you know, no matter what happened, the IRS was never going to go after any of those
IRS
women.
doesn't give a shit. And that's the first thing I thought about. And that thread went into like pages and pages.
Right.
And I'm like, okay, guys. I wanted to make a post and just like shut it down, but it's like, you know, people wanted to have fun with the whole thing.
I actually did make a post and I felt bad about it because I felt like I owed these guys the truth, and I just said, sorry, but this is never, ever, ever going to happen.
Yeah. I mean, so what we're saying, I guess, is the IRS solely bases this on income thresholds.
Income, 100%.
And there's no other risk targets out there. There's probably components of it that they base on, you know, certain deductions that people are taking too much of, for example, but, you know, just the concept of using your home as a business place or business location it's not going to trigger an audit.
It's not. And there's one other really quick one I wanted to mention.
Mm-hmm.
So the one thing that can trigger an audit, remember, I worked for the IRS, you know, earlier in my career.
Oh, that's right.
Yeah, so I have a bit of an inside scoop with this.
Oh, that's awesome. I didn't even think about touch on that, but yeah. No, that's fine. Continue.
Well, yeah, so a lot of people, there's something called the hobby loss rule that I want people to be made aware of.
Mm-hmm.
If you're just one of these, you know, somebody who has a side business / something you're going to jump into as a real business, if you show a loss, particularly a heavy loss for 3 years or more, that actually is going to get the attention of the IRS's computers, not the human beings, but the computers. So my advice for people I say people who are starting businesses, you need to like show a profit by year 3. Otherwise, you may need to consider if you want to keep doing this.
Gotcha.
Yeah.
Interesting. So there's one question that we had. This is sort of in one of these chats that I'm in, that, you know, with a few guys that are in the community that know each other really well. And this person used to go by Greek God. So shout out to Greek God. His question was, if you're a small business doing R&D for consumer products, how defined does the end product have to be? Or will the IRS allow for variance as long as everything is documented? And I did have a response on this from another smart guy in the space who I'm actually going to meet this weekend. We'll say that his handle is one developer at a time. So he basically said, and I wanted Diop to expand on it because Diop has seen this a lot more than I have. Basically, it seems like you can write off the inventory as long as you document your reasoning, and that's one component we wanted to touch maybe together.
Yeah.
But I think the finished product has to be less than $500 a piece to do that. But yeah, can you expand on that a little bit? Because you've seen that with clients, right, where they may not understand the full breadth of what this really means. Yeah.
Well, one of the big things that might trip people up is that, you know, there's R&D, which helps you figure out what product you're going to have. And then there's you actually creating the product. And that's a very important dividing line, because the IRS's rule is that once the uncertainty ends about what type of product, whether it's new or improved, that you're going to develop, that's when your R&D, research and development expenses, need to end.
Yeah, because at that point, you know that you're going to produce a product.
Yes.
And this is, I wanted to mention, that's when you know you're going to produce a product that generates revenue.
Yes.
And once you know you're going to generate revenue, it's no longer R&D.
Correct.
It's going to be, you can't write it off as
exactly.
R&D, obviously.
And one of the mistakes I see people making is that they they do some R&D and they create the product, but then they immediately start trying to create another product, and they incorporate, they sort of smash
they try
together.
to combine it.
Yeah.
Yeah, it can get pretty complicated then.
Yeah. That's where you can get into some trouble.
Right. Yeah, because with certain product lines, I assume that some of the R&D that goes in is very similar.
Yes.
And then, it kind of veers off, but it's, I guess, then hard to separate what was R&D and what product didn't actually fly in order to make revenue.
Exactly.
But you have to, and I guess the other component is, if you're actually working with R&D, if that's the case, especially when you have different product lines and similar R&D is going into each of them, get on the computer, write some reasoning on what the hell you're doing. A, B, and C product lines, what R&D went into them, what product you're going to sell, and what's not going to be able to be sold in the market. And if you don't write that down and the IRS comes after you 2 years later, I think the statute of limitations, I'm still within the statute of limitations, it's like 3, right?
Yeah.
Yeah, so if they come after you and you can't fucking remember, because usually you're not going to remember this shit.
Right, yeah.
You're going to have to go back to something that's going to explain it. And if you don't have it written down, you're going to get totally fucked.
Oh, yeah.
Yeah.
This is why, so I would see a lot more of these when I was working with the IRS, or even a little bit, I had a short stint with public accounting.
I didn't know that, yeah. I'm a public accounting guy, too.
A short stint,
we could do an entire podcast.
Oh my God, yeah. We really could.
Yeah.
That was hell.
Yeah, oh God, same here.
Right.
Yeah.
But really, it's important to know what the R&D costs can include and what they cannot include. So, formulas, inventions, pilot models, computer software, and processes and techniques, that's all part of the R&D umbrella that you should be keeping track of.
Got it.
Yeah.
And that doesn't get into production.
Correct, yeah. It's just you getting to the product.
It just kind of gets cut off before anything that you would do that produces a product in some type of volume to be able to be sold. Got it.
And just some quick ones that you should not be expensing as R&D products. Advertising and promotion, no.
Got it. Yeah, that should be a basic one, but people I guess it can't be obvious,
Yeah.
To some people, yeah.
Quality control testing, no, that's a product expense. Consumer surveys, acquiring someone else's patent, production of processes, no. Those are all product related.
Gotcha.
Yeah.
Interesting.
Yeah.
Yeah, no, it's good that you mentioned all of those. So we have a little bit of time left. And I don't think we had any other questions. I mean, I kept checking the various spaces that people would have had questions for us. But, maybe we can finish this off just by asking you if there's anything else you wanted to talk about.
Sure.
Yeah. I mean, if there's any topics out there that you think people or the men should know, this is supposed to be, and I was saying this to Diop earlier, is supposed to be a podcast for masculine men and so on and so forth. So what is your advice to men out there that are starting their own business like you yourself did, and any even other advice that you can provide maybe in the tax space or whatnot that sort of can optimize or benefit them?
Probably the biggest, I don't want to say mistake, but something I see a lot of is you really have to have a plan for what you're trying to do. I see some younger people, not just in our community or whatever, but just in general, they're jumping into one idea after the next, and it's like shooting a shotgun and seeing which idea sticks.
Yeah, in a lot of our circles we call that autism.
Yeah.
I don't want to get into that. It gets pretty hairy.
I was like trying to avoid the word, but yeah.
I know you were. I just thought I'd put it out there.
Yeah, I do. I see a lot of autism. I'm sorry, but I do.
Right.
And
people are just so scattered these days.
Yeah.
And even moving away from what we're talking about in accounting and finance, men are generally left with a lack of just guidance.
Yes.
And not only guidance. Guidance, you could say, okay, they didn't have a father figure, but they also don't have an example to follow. We talked about this a little bit last time with Doc, but that's been sort of the issue even in the accounting world. And people think of the accounting world as, hey, it's a bunch of accountants, they sit at a desk and do so-and-so, but it's, in my experience, and I haven't talked about it, this wasn't really about me. For me personally, at least my experience was, I went into the space, and as an auditor, I was able to learn about how a business works and how people run a business. And, whenever I go into a business and somebody starts talking about what a business does, I'm thinking about all these questions in my head. So that's definitely a benefit. And it's a great career option. A lot of CFOs and sometimes even CEOs even came from a finance or accounting background. So I would recommend it as a career.
I absolutely would, because what I love a lot about being an accountant is that whether you have a business or not, accounting can only enhance your ability to improve that business, and basically you need to know accounting if you're having a business, in my opinion.
Yeah, and I mean, if you guys can think about this for a second, if you're running an inventory-based business, we were talking about this just a little bit earlier.
Yeah.
I mean, if your inventory is moving, how do you know how fast it's moving? I mean, if you know accounting, or if you have a good accountant, it's actually pretty easy to know.
Sure.
You call that inventory turnover. But a lot of guys that are not tracking it or using very basic software like QuickBooks, it's not going to tell you how well your inventory is turning. Meaning, is your inventory getting in, and how are you selling it to the end customer? And a lot of times, if your inventory is staying in your system or your warehouses too long, it can end up being obsolete. This happens a lot in like perishables if you're selling food and shit like that. But I mean, you're not going to be able to sell all your inventory. There's going to be at least like some people call it shrink, some people call it obsolete inventory. I mean, this is the kind of stuff that people should know. I mean, to be able to track all of this stuff, to know that your inventory can only be sold to a certain extent. Collections is another thing. I mean, you're selling all of this stuff, and I'm sure you run into this. And the reason I want to talk about it's very important. You can generate as much income as you want on paper, but if you're not kind of collecting that money in cash, you're totally screwed. Sometimes you have to call your customers and say, hey, where's my money? Right? And I'm sure you've had to do that with clients too. And the reason I mention that is a lot of businesses have failed because their cash flow was horrible.
Yes.
And I think you've probably had some clients, and if you can offer some perspective on that, where cash flow has been an issue.
It happens on all levels, believe it or not, from the kid that starts a t-shirt selling business to even, maybe older people like running restaurants, in the service industry.
Sure.
They start a bar. People get caught up in how much money that they're bringing in.
Right.
And then they don't realize how much they were actually spending to even generate that income.
Yeah, that's another one. Yep.
A lot of it does have to do with inventory. Hey, I sold $100,000 in inventory last month. Great. Let's take a look at the cost of your inventory to see. We need to expense the cost of goods sold against that, and sometimes that's actually exceeding the amount that they're selling it for.
Right.
And so they don't even know it, but they're taking huge losses and they're bleeding money. I see that a lot.
Right, and you're bleeding more if if something gets old and you can't sell it. You got to throw it out just because you didn't know where it was or something. I mean, that's where I was getting back to my obsolescence point. And cash flow is just really, really important.
Yes.
And if you're not generating cash, I mean, you're not going to do well as a business. You're not going to be liquid. You're not going to be able to pay for stuff because in order to pay for stuff, you need cash. You can use credit, but that's only going to last up to a certain point. I didn't know if there was anything else you wanted to talk about. I think this was a really good conversation to get people into understanding some of the basics and alleviating maybe some of their fears about getting into a business, right?
The one thing I want to leave people with, if I can, is that do not be afraid to consult either an accountant or somebody that's really gone through this and can show you how to either keep records, understand trends. You really need to know what you're going into. So don't be afraid. Some people are too scared to do it. Some people think it's not worth the money. But I think it's very important to do that.
Yeah, absolutely. And Diop is very well known, within the Chicago tribe, as I mentioned. I mean, he's very humble about it, but Doc Holliday, who I spoke to last time, like I said, I think you do Doc Holliday's returns, but I think you do. I mean, a lot of the guys in the tribe know you as well. One of the policies that I have on the podcast is keep people's identities sort of separated from what we're doing here. And I mean, I like to talk to people about how they got to where they are, how they fit into the masculine space and whatnot, but I don't want to reveal people's identities. And Diop is, you've got a handle on the Rushvi Forum. and you're on one of the other channels as well, which I guess you wouldn't know about that channel unless you've contributed to the community at some level.
Oh, right,
so
yeah.
we're part of that community, and I'm not going to name that community right now. But RVF, his handle is Diop, so if you have any questions, go ahead and PM him. Or I guess you could post in the RVF Tax Lounge, and
Sure.
you've added a lot of value there, and that's the one way to reach out to him. And I guess at this point there is, I've been thinking about guests and podcast topics, and a lot of people have reached out to me, and and you don't know about this because I haven't told you yet, but one of these next topics. You guys are going to enjoy it, is going to probably end up being hog spearing.
Wow.
You probably have no idea what I'm saying with this, but there was a couple guys that were getting into a debate regarding, if you would screw an ugly woman or just jerk off.
Oh.
It was a good question, and I'm going to leave this as a cliffhanger. A lot of people voted only one way and not the other, so we might end up talking about this. So when I say hog spearing, that's kind of where that word comes from.
Oh, wow.
Anyways, I'll leave you guys with that, and until episode 3, just signing off. This is Cobra, and we have
Diop.
All right. Take care, guys. Good night.